All right, we're back in the park. Geoff Gannon, Andrew Kuhn. Let's talk about moats.
Okay.
So what is a moat? How do you judge a moat? And what are your thoughts on moat investing in general?
A moat is something that keeps out the competition, basically. It keeps your customers in, competition out. And I'd say you judge a moat mainly by your ability to retain customers even when a competitor charges a little bit less than you, or you try to raise your prices a little bit. That's basically how Buffett talks about it. So, you know, if you had 2 gas stations and the one across the street is 5 cents more expensive, does it lose its normal customers? If it does, then it probably doesn't have a moat. But if it keeps those customers, then it probably does. And I think that's what people get confused with Coke or something, like they're like thinking Buffett means Coke can raise their prices as much as they want. It's not really what he means. What he means is if Coke and RC Cola are basically the same price, you're going to buy Coke without even thinking about RC Cola being there.
What are some things, like qualities that companies can have that show that they have a moat? So you have like mind share of a customer.
Sure.
That's an intangible thing. Is there anything
Right.
tangible?
Oh, there's lots
Like
of tangible.
patents?
Sure.
I mean, just inertia of something. I mean,
Yeah.
what are your thoughts on
Yeah,
that?
so like you said, like inertia of something, sure. But I mean, sometimes it's something that's very different. Like, well, a lot of times it is actually pretty commodity-like. So that can kind of surprise people. But fundamentally, the best food things and stuff are very commodity-like. You know, there's not really a need for a ton of different ketchup companies.
Yeah.
So once one has the scale necessary, it's pretty hard to differentiate yourself by selling a ketchup that people perceive to be better. You could do that to a niche of people by focusing on one thing, but then you won't have the scale. So yeah, the ones I always give are like aggregate companies and stuff, cement companies, things like that, because you have the low value to weight ratio, which means that you have to be closer to the customer, otherwise it doesn't make sense to ship it in. You know, there can be moats like that, and those are pretty common. Buffett invests in lots of things that scale. That's one retail location that has built up a huge amount of scale. And then they usually have a lot of benefits that come together that way with being the low-cost producer.
Cool. And then I guess when it comes to like return on invested capital, how does that relate to companies that have a strong moat?
So I don't think the two are necessarily related as much as most people do.
Yeah.
I think the durability of your return on invested capital is determined by your moat. But there are actually companies that have moats that have fairly low, but still better than average, usually returns on invested capital. And then there's ones that have incredibly high. But the problem that you should watch out for is there are companies that have very high returns on invested capital and no moat. Like people say, oh, well, this must mean they have a moat. No, it doesn't, because in 3 years they might not have that return on invested capital. There's just some businesses that are that way. So any software business is going to have, because it has like almost no assets and has good gross margins, going to have really high returns on invested capital. But you want to figure out, will everyone switch to a different company when they come out with something new and different, or will everyone say, oh, I really want to stick with the old one? And there's somewhere you could probably guess. Like you could probably guess, if you're using QuickBooks, if someone comes out with something better, you probably would think hard of whether you want to switch everything over to that and take that risk. But if they came out with a free whatever weight loss app or something, you'd be like, yeah, I'll try that out.
Yeah.
And so you could lose everyone that way. Yeah.
Cool. Thank you so much for watching. Thank you for being a subscriber. Email me focuscompounding@gmail.com, and we will see you in the next video.